Ather Energy, which started off its journey in the electric two-wheeler industry in India as a startup, has now evolved to a much larger player. And now it is planning or lined up some new initiatives, one of which is found in this model, which started off as a limited edition, but now it sits on top of their portfolio as a flagship product. I'm talking about the 450 Apex. And the feature here is the cruise control, or what do you call it?
Infinite cruise.
Finite cruise. Okay, so tell us, to begin with, Ravneet, uh, this how did this idea of 450 Apex evolve from an limited edition to give maybe to give some brand halo to now a full-fledged, you know,
Yeah, it's been a bit of a journey.
product.
It's been a bit of a journey. It began as limited uh, with the translucent panel and a bunch of other things we had done, including Warp, the Warp Plus, right, which is our quickest mode yet. And we thought we'll do a limited edition, get some brand halo, get some eyeballs, get some PR going, and then just move on from there. But when we launched, we realized that it has a passionate group of people who love it. It's a small group, admittedly, right? But that group is passionate, right? And that group exists externally as customers and internally as people as well, right? There are a bunch of people who will kill for this before they let it go. And there are a bunch of people every month, a few hundred people who buy this, right? So he said, you know what, if it's, if it has a reason to exist, and also importantly, on a more serious note, it allows us to bring new features first here, right? Uh, this is a flagship, right? So all cool new features first come here. Sometimes it hasn't happened of late, but sometimes you want to experiment with something, right? So this is a low scale SKU, right? So low risk as well. Also, given the nature of people who buy this, they are sort of, even though this has been there for a while, but in their mindset they are little evolved, little early adopter type of mindset, right? So they're also happy to experiment, right? So yeah, the many reasons for it to exist, and we're very happy here.
So this one, so if you take the top part, the larger the story for Ather, you are now what, about 360 odd outlets?
No, more. We are in about 360 cities.
360.
Yeah, we're touching about 450 outlets now.
Okay, what's the expansion plan there for you?
So we have a line of sight of hitting about 700 stores by end of this financial year. Now, that 700 is not driven by any operational or financial limitation. Actually, there's no financial limitation because it's the dealers that spend the money, we don't. So it's not driven by a constraint. Uh, it's just driven by our current understanding of what our rightful scale should be. Because one thing we've been very clear about is that we want to make sure that the channel is profitable. We don't want a situation you get greedy and start opening stores without adequate throughput for the channel for the partners to be profitable, right? And we also try and work with a finite set of partners. So we, as much as we can, we give, not legally, but philosophically, we give a first right of refusal to existing partners when you open a new store. So you want to make sure that partners are happy and they are profitable. And if you look at market opportunity, if you look at our understanding of those individual towns and cities where today we are targeting, 700 looks like a good number. If we believe that the opportunity is greater than what we had imagined, we can amp it up. We have the capability.
Okay, Ravneet, help us understand how the electric two-wheeler market is evolving. From, I mean, every like a product, the market also has its journey, different junctures. I think it has gone to the next stage, and which is why you're witnessing the birth of subsegments. It's getting segmentized, and which industry players are trying to tap with different offerings, and which you want to. Now, we started with the Rizta, and then the new platform based product which will come hit the market next year onwards. But at this stage, let's say in your case, the 450X and then the Rista, of course, it has opened up new avenues for you. What is the mix like, and how is the market evolving in terms of these opportunities that are that are being presented for industry players to tap?
So I think the market is evolving, right? And which reflects in it manifests in a few ways, right? So today, if I look at, and numbers may keep few percentage points up and down, but fundamentally, if you look at, the top 5 players are about 87% of the market today, right? Uh, which clearly suggests that consolidation sort of is we are there, right? Uh, Also, as market is evolving, the fundamental barriers that existed maybe a year, 2 years back, they're not there anymore. I'll do things like, for example, till a couple of years back, there wasn't enough product choice for consumers. Even if you had the money, you didn't have enough choice, or products to look at. Till about 3 years back, the legacy players had not come in, right. For a lot of players, they needed that stamp of approval of a legacy company to say this is real, right?
So their entry has also helped the other
Very
players.
much, very much so, very much so. I think we've always said that, when legacy players come in, it gives for a conservative consumer, it gives a stamp of approval. Early adopters will buy anyways, one way or the other. But I think for a vast majority of people, the fact that respected brands came in, I think that changed the market. Uh, the distribution of late, legacy players have opened up the entire distribution. We are expanding. Other startups also expanding. So distribution. So if we just take a little zoomed out view, so there are credible brands with great products, straddling multiple price points, available across multiple stores, multiple geographies. So those fundamentals are taken care of. Now is a stage where, as we are going a little more mass, is to address certain barriers in consumers' mind, and these are fairly rudimentary barriers. Like, for example, battery. How expensive is it? How robust is it? How safe is it? If I have to replace it, how much will it cost me? Will I get service if I buy a product? If I have to sell my product 3 years later, what is the resale value? Where do I charge if I get stranded, etc.? These fundamental questions, valid questions, right? People have, which typically get sort of organically addressed with people's personal experience, but that's a slow journey. I think what we need to do is to fast track that maturity by overtly addressing these questions. So, our recent campaign, internally we call it Ather Advantage. We talk about a charging infrastructure and fast charging. We talk about that we have a buyback program to allay the concerns about resale value. We talk about a 8-year battery warranty. We talk about the fact that we have service centers everywhere. And just addressing those questions people have. But if you look at fundamentally, we are on the path where growth from here, whatever pace it might take, is sustainable.
Talking about growth, the Indian two-wheeler, electric two-wheeler industry, for the first time, I think, crossed the 1 million mark in the year ending March 31st, 25. And this year, it's on a growth path, but there's been a pulling down in terms of the growth rate. What is your expectation in terms of the journey here on for the rest of the year, and maybe, let's say, about the next couple of years?
So, see, you we can't do crystal ball gazing. I can just talk about logically how I see it as somebody who's in the business for last 10 years. At different points in time, we had different expectations of growth because we knew that there were certain structural things that had to be solved in the industry. Today there is none, structurally speaking, right? Which means that if structurally you solve for it on the supply side, on the OEM side, and on the demand side, on the consumer side, there are no big glaring questions that are left unanswered. It's a question of people getting familiar and comfortable with things, right? Which is what I said earlier. Normally happens organically with time. You can fast track that by the industry sort of coming together to address those questions people have. So I'm very bullish about the future, right? Because there is no reason to believe, right? There is no reason to believe that this is not going to grow. And sometimes when you look at two-wheeler penetration and growth, that you tend to arrive at the wrong conclusion by looking at overall two-wheeler number, because you also include motorbikes in that. Motorbikes, really, it's very early stages. If you look at scooters, depending on the mark, you're looking at 18-19% penetration, which means that if you just round off to 20, 1 in 5 people are already buying this. If
So you're saying that in certain markets, it already reached 18, 19%?
I'm talking about a national number,
Yeah.
is between 16 to 18 and a half, depending on the month, right? So
Right.
take a 15, 17, the average, right? I'm just rounding off to make a point, right? If 18-20% people are buying electric scooters today, which means every fifth person is buying an electric, you have to believe that the balance four are definitely checking out electric, which means that the first stage of, listen, have you crossed the barrier that do I even consider electric? That barrier is gone. Having considered electric, I may have some questions. For some, the question is answered, in which case they buy. For some, it's yet not answered, in which case they don't. But it's a journey we are.
Right. And talking about Ather, because you started this journey from this city, Bangalore. You inherently have a relatively better, stronger presence in the south. How are you growing the overall nationwide journey story for you? And just at what stage of, let's say, what level of market, let's say, presence do you have in these? If you have to dissect it into four regions, let's say.
Right. So I'll 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 background a bit to give you context, because otherwise without that the answer may not be fully nuanced, right? We are a strong South player, and it's not just because hey we are a homegrown South brand and therefore we are strong. That's really not the case, right? It helps, but that's not the reason, right? Uh, it really stems from our portfolio and how it's evolved. So our first product was Ather 450, which is very clearly a performance scooter. Performance scooters are about 20% of the entire market, but highly concentrated in the southern market. In markets like North and West, performance scooters are about 5%, 7% of the market. So our product had a natural draw in, in southern India because it was more relevant to a wide group of people. Secondly, any new technology, and not just automotive, any new technology, typically penetrates first where there's a very strong correlation between GDP and therefore education, therefore adoption of anything new. South clearly is ahead of that, right? So if you put all these things together, it was very natural for us to, because the South market was more open to EVs, and as a brand and as an offering, we are more relevant to South than we were to other parts of India. So having done that, having gained market leadership, now we basically looked at our market in sort of three parts. So southern India, which is the all five southern states. Then the next is we call middle India. Middle India goes like Gujarat, Maharashtra, MP, Chhattisgarh, Odisha. That's middle India for us. And then there is rest of India. Now, for us, south is the market for consolidation. We're already market leaders here. Middle India is a growth market for us. We're investing and disproportionately there, which has borne results. For example, we are market leader in Gujarat. We used to be like 5%, 7% of market share till about a year back. We are about 20 plus now and market leaders
In Gujarat.
in Gujarat. Maharashtra, we almost doubled our share. MP growing. So all these markets are growing now. And the rest of India are what we call nurture markets, where we are investing for the next phase of growth, right? And our market shares reflect that. South markets, we are typically, if I look at the entire South put together, about 22, 23, 24% depending on the month, right? So leadership there. If I look at middle India, 20 odd percent in Gujarat, about 15 odd percent Maharashtra, 12, 13 other places. So clearly, and the rest of the markets are sitting at about 8 to 10%. So that's how it's stacked up for us.
So overall, your overall share is about what? About 16, 17 odd?
Yeah. So if I give you exact figure for today, 17.3%.
All right. And next year will be crucial because your new plant will go on stream, no? Will be commissioned towards the end of the year, right?
Yeah, broadly, yeah.
Yeah. So how big will that be in terms of fueling or meeting your overall ambitions, which of course includes international play?
Yeah. So see, typically you start planning for a new plant when you're about 60-65% utilization of the current plant. And importantly, your utilization is not like what you sell in the year divided by 12. You have to look at run rate, right? So if I'm selling average, let's say in a full year, let's say 2 lakh 40, it's not like I'm selling 20 every one. I mean, start with 10 and with like 30, 35, right? So I have to look at 35, right? Which is why we're investing in, in the next plant. Importantly, the new EL platform is we may start in Hosur, but essentially it's going to be in that plant. So which is a bespoke for the EL platform, which gives us new platform capability and gives us obviously scale, right? First phase is about 500,000 units, scalable to 1 million units there, but we'll start with 500,000 in phase one.
Right. And current one is how much?
4,20,000.
Lastly, Ravneet, this year, at what level do you expect the electric two-wheeler, particularly the scooter market, to end the year?
Difficult to say, honestly, difficult to say, because while I say there are no structural barriers, but markets take time to warm up, especially as you enter new geographies, tier two, tier three. It takes time to for consumers to get their head around and be comfortable with anything new. So growth will continue. How sharp, difficult to say.
And tier 2, tier 3, that part, and the tier 1s. I mean, in your case, you have been focusing on the tier 2, tier 3, and you are getting good adoption rate also. What's the split between, let's say, the tier 1s and the rest?
No, actually, there are two myths I'll break here. One is that the tier 1 is growing faster than tier 2 or 3. That's not true. Absolute numbers, yes, because there's just large geographies, more people. But in terms of penetration, tier 2, tier 3 is growing faster than tier 1.
I see.
And in some geographies, tier 2 is the fastest growing. Even for us, a large proportion of our volumes come from tier 2, tier 3. So it's, listen, we have 360 cities, right? So,
Yeah.
like you can imagine, I mean, how many cities would you know in 360? Like, you stop counting after 25, 30 cities, you won't know the cities, right? So, no, so I mean, like I said earlier, we've been very careful about only starting a new town or a city where we know we have a certain volume you can garner, right? And the fact that the channel is up and running there means we are selling there. Otherwise, there wouldn't be any stores there, right? So,
Okay. Wishing you all the best in the journey ahead, Ravneet.
thank you.
Yeah.
Thanks very much.
Pleasure meeting you. And it's good to have a chat with you.
Likewise.
There you heard Ravneet Phokela, Chief Business Officer at Ather Energy, talking about not only this 450 Apex and how it moved from being a limited edition product to a flagship in its portfolio to the overall market expansion and the market trends in the Indian Indian electric two-wheeler industry. On that note, thanks for watching this interview. Take care. Goodbye.